Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ametek Inc. Annual Report. Ametek Inc. offers a diverse range of businesses and services across various industries. The company's Electronic Instruments Group, EIG segment provides advanced instruments for process, aerospace, power, and industrial markets. This includes process and analytical instruments for oil and gas, petrochemical, pharmaceutical, semiconductor, automation, and food and beverage industries. The EIG segment also offers a wide range of products such as laboratory equipment, ultra-precision manufacturing, medical and test and measurement instruments. Additionally, it provides power quality monitoring and metering devices, uninterruptible power supplies, programmable power, and electromagnetic compatibility test equipment. The company also manufactures dashboard instruments for heavy trucks and other vehicles. In the aerospace and defense industry, Ametek's EIG segment offers aircraft and engine sensors, power supplies, embedded computing, monitoring, fuel and fluid measurement, and data acquisition systems. On the other hand, the Electromechanical Group, EMG, segment provides engineered medical components and devices, automation solutions, thermal management systems, specialty metals, and electrical interconnects. The EMG segment also offers single-use and consumable surgical instruments, implantable components, and drug delivery systems. Furthermore, it manufactures precision motion control products for data storage, medical devices, business equipment, and automation. The company also produces high-purity powdered metals, strips and foils, specialty-clad metals, and metal matrix composites. In addition to its product offerings, Ametek operates a network of aviation maintenance, repair, and overhaul facilities. Its motor blower systems and heat exchangers are used for thermal management in military and commercial aircraft, as well as military ground vehicles. The company also manufactures motors for commercial appliances, food and beverage machines, hydraulic pumps, and industrial blowers. Overall, Ametek's diverse range of businesses and services cater to various industries including aerospace, defense, oil and gas, petrochemical, pharmaceutical, semiconductor, automation, food and beverage, medical, laboratory equipment, ultra-precision manufacturing, test and measurement, power quality monitoring, and more. Ametek Inc.'s stock price has experienced a substantial surge of 27.41% in the past year, driven by several key factors. The company's record-breaking financial results for the fourth quarter and full year 2025 were a significant contributor to this growth. With sales reaching $2 billion in the fourth quarter, a 13% increase over the previous year, and adjusted earnings of $2.01 per diluted share, up 7%, Ametek exceeded analyst expectations. The company's strategic acquisitions also played a crucial role in its stock price increase. The acquisition of Faro Technologies for $920 million bolstered Ametek's capabilities in 3D measurement and imaging solutions, while the acquisition of LKC Technologies enhanced its presence in the healthcare sector. Additionally, the acquisition of Kern Microtechnik for $51.6 million improved its high-precision machining capabilities. Furthermore, Ametek's commitment to returning value to shareholders was demonstrated through a 10% increase in its quarterly cash dividend, raising it to $0.34 per share. This move signaled management's confidence in the company's financial strength and its ability to generate returns for investors. The positive sentiment from analysts also contributed to the stock price appreciation. Several financial institutions issued favorable ratings and increased their price targets for Ametek stock, further boosting investor confidence. Overall, these combined events have underpinned the significant increase in Ametek Inc.'s stock price over the past year. Ametek Inc. market capitalization of $54 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Ametek Inc. holds a significant advantage in their industry. Ametek Inc. trades at a higher price-to-earnings ratio of 37 times and a higher price-to-book ratio of 5.04 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The company maintains a moderate leverage profile, with liabilities making up 34% of total assets, suggesting a balanced approach between risk management and capital efficiency. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be categorized into several key areas. Revenue growth is primarily driven by a combination of factors. Strong market share in niche markets and technological advantages through innovation and R&D investments have enabled companies to expand their customer base and increase sales. Efficient manufacturing operations, experienced management teams, and operational excellence initiatives have also contributed to revenue growth. Strategic acquisitions, global expansion, new product development, and organic sales growth have further boosted revenues. In addition, favorable market trends, backlog of unfilled orders, and the implementation of the Ametek growth model have all had a positive impact on revenue growth. The benefits from operational excellence initiatives, exclusion of acquisition-related integration costs, and increase in operating margins due to sales growth and operational improvements have also contributed to revenue growth. On the other hand, revenue decline is primarily driven by external factors such as exchange rate fluctuations, compliance with export laws, reputation damage, inability to hire/train/retain skilled employees, failure to develop new products on a timely basis, disruption in supply chain, competition from other companies and emerging technologies, changes in government regulations and laws, and failure to protect proprietary technology. The company's net income and profit margins experienced significant improvements between 2024 and 2025. Net income increased by $0.47, or 7.9%, to $104 million, or 7.6%. This growth was driven by various factors, including operational excellence initiatives, strategic acquisitions, global and market expansion, new product development, organic sales growth, and contributions from recent acquisitions. The net income margin remained relatively stable at 20% in 2025, compared to 19.8% in 2024 and 19.9% in 2023. However, segment operating income margins increased to 27.4% in 2025, up from 27.2% in 2024. Operating margins also improved significantly, rising from 20% in 2024 to 23.3% in 2025. Additionally, EBITDA increased by $145.2 million, or 6.8% from 2024 to 2025. The company's ability to expand its global presence and develop new products contributed to the growth in net income and profit margins. Strategic acquisitions also played a significant role in driving revenue and profitability. Overall, the company's focus on operational excellence, innovation, and strategic expansion has led to improved financial performance. The company's financial performance in 2025 was marked by a significant achievement. It successfully generated positive operating cash flow. This milestone is confirmed across multiple pages of the report, with various metrics and figures consistently pointing to this outcome. According to the data, the company's operating activities yielded $1,801.8 million in cash provided by operating activities, while its free cash flow stood at $1,671.6 million. These numbers not only demonstrate a positive operating cash flow, but also highlight the company's ability to generate substantial cash from its core operations. The consistency of these figures across different pages of the report underscores the reliability and accuracy of this data. The company's success in generating positive operating cash flow is a testament to its financial health and stability, providing a solid foundation for future growth and development. The company's debt level and interest expenses have undergone significant changes over the past few years. In terms of debt level, there has been a notable increase in total debt. According to various pages, the total debt increased by $203.6 million, 9.8%, from 2024 to 2025. However, it is worth noting that the debt level decreased in 2025 compared to 2024, but only by a minimal amount of $1.9 million. On the other hand, interest expenses have seen a significant decrease. the company's interest expense decreased by $31.7 million, 28.1%, from 2024 to 2025. This is consistent with multiple pages that report a similar decrease in interest expenses. However, it is worth noting that there was an increase of 38% in interest expense from 2023 to 2024, but no information is provided for 2025. Overall, while the company's debt level has increased significantly, its interest expenses have decreased substantially over the past year. Management's outlook on the company's future is optimistic, with a focus on achieving high single-digit annual sales growth and double-digit earnings per share growth through its Ametek growth model. This model encompasses 4 key areas: operational excellence, strategic acquisitions, global and market expansion, and new product development. The company prioritizes long-term value creation for stakeholders by emphasizing environmental protection, sustainability initiatives, and responsible corporate conduct. To maintain technological advantages and develop new products on a timely basis, management recognizes the need to invest in research and development, with costs increasing over time. Strategic acquisitions will continue to play a significant role in enhancing the company's global market position and broadening its product offerings. The success of this strategy is evident in the record operating income achieved in 2025, which was driven by sales increases and operational excellence initiatives. Management's investment strategy aims to maximize funded status while minimizing company contributions and plan expense through equity holdings and alternative assets. Overall, the company's outlook is focused on growth, innovation, and long-term sustainability, with a commitment to responsible business practices and value creation for stakeholders. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company paid out significant amounts in recent years, with $285.3 million distributed in 2025 and $258.8 million in 2024. This demonstrates the company's commitment to returning value to its investors. In addition to paying dividends, the company has also been actively buying back shares. In 2025, it repurchased approximately 2.3 million shares for $443 million, while in 2024, it bought back around 1.3 million shares for $223.1 million. This share buyback program not only reduces the number of outstanding shares, but also supports the company's stock price by increasing earnings per share. The company's share buyback authorization remains substantial, with $807 million available for future repurchases at December 31, 2025. This suggests that the company is committed to continuing its share buyback program and returning value to its shareholders through this means as well. Concerns about inventory buildup and supply chain disruption are evident in the company's financial records. The inventory balance has increased significantly from $13,032,000 in 2023 to $13,697,000 in 2024, indicating potential issues with inventory management. Furthermore, estimated reserves for slow-moving and obsolete inventory suggest that a substantial portion of this increase may be due to unsold or outdated products. The company also acknowledges the risk of supply chain disruption, which could have a negative impact on operations. A shortage or price increase in components and raw materials is mentioned as a potential threat, while tariffs and trade restrictions on imported goods are also identified as future risks. These concerns highlight the need for the company to reassess its inventory management strategies and explore ways to mitigate supply chain disruptions. That concludes the financial summary for Ametek Inc. Feel free to comment below, and I will be happy to answer them when possible.